This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 21st, 2016. Euro dollar. So the euro has come back under pressure after stalling out into a recent rally, with the market remaining well capped below that recent 2016 high at 114.65. While we hold below 114.65, which comes into some medium-term resistance, the overall risk continues to favor the downside, with the breakback below 112.34 recent support to expose next key support at 111.45 further down. Again, any rally should continue to be very well capped, with only a breakback above 114.65 to compromise this outlook. If we do see a breakback above 114.65, that'll be a constructive development and could expose critical medium-term resistance at 17.10 further up. Sterling dollar. So cable has seen a little bit of a rally in recent trade, though while the market holds below 145.15, the risk is for another lower top ahead of the next major downside extension. Ultimately, though, we need to see a breakback below 140.05 to get the market pressured back to the downside and accelerate towards the recent 7-year low at 138.36, which guards against critical multi-year support at 135 further down. If we do see a breakback above 145.15, however, this will take the pressure off the downside. Dollar yen. So although dollar yen has seen a bit of a bounce in recent trade, while the market holds below some previous 2016 support now turn resistance at 110.67, the pressure does remain on the downside in favor of what could be the next major downside extension through recent multi-month lows and towards a measured move at 106.50 further down. At this point, a breakback above that previous 2016 base at 110.67 would be required to take the immediate pressure off the downside, although ultimately the market would need to establish back above 114.87 to really negate the current downside pressure. Euro Swiss. So Euro Swiss has seen a nice little bounce in recent trade as the market continues to be very well supported on dips down towards the 108 area. At this point, fresh upside is now favored beyond recent highs at 110.24, which will expose a retest of the multi-month peak at 112 further up. Only back below 108 would compromise this constructive outlook. Aussie dollar. So Aussie continues to trade at 2016 highs, and the market seems to be focused on a potential test of next key medium-term resistance at 78.50 further up. Above there would then expose psychological barriers at 80. At this point, though, we would need to see a break and close really back below recent support, which comes in at 76.19 to take the immediate pressure off the top side and open the door for a more significant test of support at 74.77 further down. Dollar CAD. So dollar CAD continues to trade down to its own 2016 lows, with the market now focused on a test of a measured move objective at 125. At this point, the market is starting to look a little stretched, so if we do see a test of 125, there is risk of a corrective bounce. But ultimately, at this point now also, we would need to see a break back above 129.90 to really take the immediate pressure off the downside. Kiwi dollar. So Kiwi has seen a recent 2016 high above 70 at 70.54 ahead of this latest minor pullback. But while the market holds above 67.59, there is risk for additional topside pressure, with the market seen potentially wanting to extend up towards next key previous medium-term resistance, which was a former support at 71.76. At this point, again, it will take a break back below 67.59 to really take the immediate pressure off the top side. SPX 500. So the S&P 500 has done a good job of extending its rally now, that impressive rally out from those lows, those yearly lows and multi-month lows at 1808, all the way back now to above 2100, which exposes initial support, initial resistance that comes in the form of that high from November of 2015 around 2117, above which would expose a retest of that critical record high from 2015 in the 2130s. At this point now, we would need to see a break back below 2065 to really take the immediate pressure off the top side. But still, there is risk for this rally to fade, and so long as we hold below 2100 on a weekly close basis, there is potential for a more significant formation of another top up here ahead of a major retreat and downside extension. Gold. So gold continues to consolidate over the past several days, though the consolidation is looking bullish, with the market holding above some previous resistance now turned support in the 1190 area. Look for the market to eventually track higher above the 2016 high in the 1280s and towards medium-term resistance in the form of that 2015 peak at 1307 further up. Only back below 1190 would compromise this constructive outlook for gold.